Let's get to the final trade of the day, and we would be remiss if we did not mention the tragic suicide that's being reported of a young man this week who thought he lost $700,000 when trading on the Robinhood app. Our hearts go out to his friends and family. We are bringing in a pro trader, Mark Sebastian of Option Pit Mentoring. And Mark, you are a veteran. What do you do when you see a big loss on that screen? Because it is scary. What is your advice?
Yeah, a lot of times those giant losses that you don't expect aren't real. And that's the most important thing is if something doesn't seem right, then ask somebody, reach out to somebody who's an expert. Your brokerage platform probably has a customer service that can walk you through why you're showing this giant loss that you didn't expect. Is it possible to lose some money on a brokerage platform? Yes, but they all have things implemented to make sure that you don't truly blow through your whole account. And so the sad part of this story, the truly sad part of the story is he really did not lose any money, likely, from my understanding, on this actual theoretical loss that he'd seen. It was more just his account didn't have the money to cover the stock that he was buying from being assigned on a put. It was a pretty simple thing to understand if you understand options and derivatives, but this person didn't. And then he made the step not to reach out to Robinhood or his parents or to a financial expert. And when you see something like that and you're like, this doesn't make sense, or how could this happen? Ask somebody, and then maybe you could avoid internal turmoil, internal peril, or worse, what happened with this young man.
What about the risk in this market right now? The old theme is buy low, sell high, and that can work when we see these dramatic dips in the market. But the problem is not everybody is going to come out a winner.
Well, you never know how low things can go, and you never and you have to make sure that you have the time to be in a trade, right? 3,000 for the S&P 500 was inexpensive in February. And then it was extremely expensive in March, and then now it's fair value. So you have to have an understanding that things can go a lot lower than you expect, and they can take longer to recover. So if you don't have a long-term view, if you haven't looked back historically, from the highs of 2006 and 2007 after the financial crisis, it took us like 6 years to get back to those levels. So don't think that we're immediately going to get that bounce. It's not always going to be that way. There will be a period of time where things are low and stay that way for a while. Take a look at what happened in the 1970s. The only thing good to come out of the 1970s is this.
Oh, Mark, you always have a way to make us smile. We will leave you on that note. Happy Father's Day to you and your kiddos.
Thank you. Have a great weekend, and thanks again.
More Business First AM. Check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.